Welcome to the program. Today we're going to talk about the global economy, the theme behind our Investor Strategy Day in March. We'll discuss the upcoming reporting season and we'll tell you what we think you should do with NAB and Clydesdale. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
We've only got 2 minutes and we're going to cover off each topic in no more than 2 minutes. First question, Pete. Global financial markets. It was a tough January, improved a bit. A lot of stuff happening at the moment. Your thoughts right now?
Look, the list of bads versus good, the goods are starting to catch up on the bads, but the bads are still outweighing them. We've got this question mark over oil. We saw overnight oil price fell.
Another tough night.
Yeah, the stock market fell. Look, I do like the idea that there's a seasonal upkick in oil prices. It happens around April, but they often start buying now, and the reason is as the winter thaws out, people in the USA and Northern Hemisphere, those mad Italian and French drivers jump in their car and start driving and buying petrol. So I hope we see a bit of a kick in the oil price, purely because the silly relationship between the S&P 500 and oil prices falling. Paul and I agree that markets should be going up with lower oil prices, but at the moment they're spooked, they're worried, and look,
I guess part of the concern there is that with oil prices falling, it's going to lead to less capital investment, which will obviously also have an impact on the economy and employment in the short term. I think is sort of what the doomsday merchants are selling. Yeah. Paul, your thoughts?
Yeah, they are, and they're also, you think you're seeing that in the price of things like bank stocks, particularly in the US, and some impact here because they're saying, there's all this money that's gone into lending for setting up all these oil rigs in the US, and if the oil price comes down and all the drilling companies have to pull out, there'll be some bad debts and that'll spread into the banking sector, and you'll get the sort of the...
I think it's crap.
The contagion.
Snowball effect.
Yeah, the snowball effect that people are so quick to get onto these days. They just love it. Yeah. Look, there's probably a little bit of that, but I think for our market, I still maintain until we see a floor in commodity prices, and maybe we're starting to see one around these levels, but a bit early to call. It's very hard for our market to get up. So I think when we got over 5,000, I think that's probably the top of the range in the short term. Maybe our earnings season next week is a catalyst, but we're going to need some hell of a lot of good results for our market to go independently of what's happening in the rest of the world.
Central banks have been making a lot of noises at the moment. Pete, your views on what the Bank of Japan did?
Yeah, they're kind of getting it right. The negative interest rate decision, it basically, I call it the Rooster Cogburn approach. That's an old John Wayne movie. He said, load up your hands, you sons of bitches. The idea is, get out there, you Japanese people, and spend and stop saving. That's what they're trying to do. I think the ECB did the right thing. I think the Fed also put out the right indications that they're not going to give 4 interest rate rises this year, and some idiot Fed members are actually saying that, and that didn't help the market overnight. So I think central banks aren't letting us down. I just think that at the moment fear is prevailing, and fear will until some really good news comes along.
I read slightly more into the RBA statement yesterday that may be a little more prospect and easy, but that's not the market's interpretation. So let's see what happens there.
And we'll move on that point. So on March 16 and March 17 in Melbourne and Sydney, we're running an Investor Strategy Day. It's called Australia for Income, International for Growth. It was based off a concept that Charlie Aiken wrote about on a regular basis, and so we've decided to bring this to a seminar with Peter Switzer, Paul Rickard, George Baburis, Charlie Aiken as one of the frontline acts, and a number of other experts in the industry. Paul, I'll go to you. What are the reasons why we're taking this theme to our audience of investors?
Yeah, look, I think just go back to Australia for Income and International for Growth. Why? First of all, as we know, the Australian market is incredibly dominated. We've got 4 banks, and the financial institutions make up 40% of the market. We've got resource stocks that make up another 15%. Banks are struggling to grow revenue. The resource companies are doing it tough. Where do you get the growth in the Australian market? So I think that's one of the reasons you've got to look overseas. Apart from the fact that we're a really small market, and we know that everything these days is global, so it's really hard. There are some great Australian companies growing, but if you really want to participate in the growth of the likes of the Facebook or the FANGs, the Googles, the Amazons, it's overseas, it's not in Australia. At the same time, on the income side, we've got one of the most tax advantaged systems for investors in the world called dividend imputation.
Or franking credits.
And franking credit, it's unique. And so, we have one of the reasons we have high yields. We've also got a pretty strong property sector, so I think that's where you look at.
And we'll be looking at the different opportunities that people can get in property and infrastructure and fixed interest investing for
Yeah.
yield through equities. Pete, your
Yeah,
thoughts?
and the reality is most investors are happy with somewhere between 7 and 10%, which you can get in Australia. But I guess the argument is, okay, let's solidify your retirement returns or your investment returns by going to income, but then try and get that little alpha return from looking at overseas. And that's where the growth is happening.
And we know from all the statistics that the ATO produces on SMSFs and also that we see from our own clients, most clients are really underweight international. I know I'm underweight.
Yeah, me too.
It has been hard to do, and it's obviously there are more opportunities. So
It's going to be
so I think we've all got to look at that, and I think that's pretty much behind the theme that we're trying to come across on those days, Marty.
But it's going to be a fantastic event. March 16 in Melbourne, March 17 in Sydney. If you'd like to attend, you can go on screen now. You can click the web link on screen, and there's also a web link in the description that you can click. It's going to be a very beneficial event. So we'd love to see you there, March 16 and 17. Moving on, next topic, we're going to talk about the reporting season coming up. There are a few companies to report this week. Pete, your thoughts on what we should be expecting?
Well, the expectations is about 4% increases in the overall earnings. I'm hoping that we get better than expected results. I'm probably keeping my fingers crossed rather than having solid reasons for it. I'm hoping that the fact that we've had now a year at least of a lower dollar and also a year of lower oil prices, that this will help a lot of companies' bottom lines.
The economic numbers in Australia are fairly positive at the moment, so hopefully that can feed through to the bottom line of the
Exactly, and the
companies.
Reserve Bank basically implied that yesterday. So putting it together, there's good reason to believe over the course of this year earnings will start to improve. Whether it comes now is probably a hope thing, and I hope it does come because I think there would be a real stimulus to the market.
Paul Rickard, who do you think will surprise and disappoint this earnings season?
Well, I think the resource companies are all going to be pretty terrible, right? So, look, forget the headline numbers, how much they've lost the last half year. It's irrelevant. It doesn't matter. For resource companies, it's really about their forward-looking statement. What are they doing on their own productivity? Can they survive with resource prices where they are at the moment? And how are they managing that? And so that's what we've got to be looking out for there. So I think that's a little different. Look, surprises, I'm hoping to see a better report from Commonwealth Bank. I'd like to see some good news from the banking sector. They are due out next Wednesday. Their last half year was a bit ordinary and didn't have what I look out for, which is what we call positive jaws. That's the rate of revenue growing faster than the rate of expense growth. So hopefully we'll see some good news there. I also think companies like some of the industrials, we really want to see some top-line sales growth. I think that's what's been missing.
So the story of the last couple of years has been cost out, hasn't it?
Yeah, the story has been cost out, and I'm sure we're going to see some more cost out this reporting season. But if we're not seeing the sort of a bit of a headline growth in revenue, I think we've got some challenges. So the market there is, expectations are still very low, and you should see that, particularly with some of these companies that are winners from having a lower currency. And there are a lot of people in that category.
Over 300,000 jobs were created this year. It's got to filter through to some companies who are actually doing this employing.
Yeah. Some key ones to look out for, Marty. Obviously tomorrow we've got a couple with Tabcorp and Downer ticked off. JB Hi-Fi on Monday is a big one.
REA this week too, I believe.
REA is also on Friday. So there's three this week. JB Hi-Fi on Monday with Ansell. I mean, JB Hi-Fi is pretty well priced for it. Yeah. You know, the short sellers have been there. They've all changed their position around. It's been really good performing stock.
And the settings are good for a consumer
The
discretionary
settings are
stocks at the
good,
moment.
so it'll need to perform to maintain what's happened to its price. I said CBA as well next Wednesday, and then we get to the companies like Boral as well to see what's going on there and the progress they're making. So a lot to come out. It really picks up the week after next, but some big names next week really kick the cycle off.
And moving on, our finance tip today, Pete, I know Paul's got some strong views on this, but NAB, Clydesdale, there's an opportunity for investors at the moment to take up ownership in Clydesdale. Your thoughts on what they should be doing, or what are you going to be doing?
I'm going to hold. You know, as far as I'm concerned, I've always believed that this is an institution that was crushed during the GFC. It was a fast grower prior to the GFC. The UK economy has struggled. It's now coming back. It's a wise time to float this, and I think over time the UK economy will do well. The share price should go up. I'm hanging on.
So, but what investors need to know?
Yeah, so the CYBG shares, CYBG PLC, a bit of an acronym, gosh. It's been priced at £1.80.
That's the Clydesdale bank that the NAB is selling.
Yeah, so that's notice now called CYBG, and if you're a NAB shareholder, for every 4 NAB shares, you now own 1 CYBG PLC share. 2 important things to note. Today is the last date you can make an election if you don't want to own those shares. In other words, if you want them to be sold as part of a share sale facility. You have until 5 p.m. today. That's the 3rd of February.
Do nothing, you own them.
Do nothing, you own them. Secondly, the other thing to note is that NAB also will trade today ex-dividend or ex-entitlement. So you'll see the NAB price artificially down today, probably in the order of about 70 or 80 cents because of this entitlement. It's just simply a mechanical issue, but that'll happen today. Coming back to whether you want to keep them, I'm going to keep them. This bank's got a cost-to-income ratio of almost 78%. You compare that to Australian 40 to 50%. Huge opportunity to improve. Look, I think there's upside. But look,
and I just realised, Paul, that if you own shares in a British company, you could fly over there for the shareholders meeting, and part of that trip would be tax deductible.
Yeah, look, and they will have a listing here in the Australian market, so there'll be CDIs you trade. One other thing quick before we go, Marty, it's just if you haven't picked this up, the Australian market is moving from a T+3 settlement to T+2 on the 7th of March. That means it will now settle 2 business days after your trade date. So if you trade on a Monday, the shares will actually settle on the Wednesday. If you trade on a Wednesday, they'll settle on a Friday. So that's a big change. It means if you're buying shares, you need to make sure the cash is in your account earlier. You get the cash quicker if you're selling. Okay. 7th of March, big movement, T+3 to T+2. We should talk more about that in future.
Yeah, for sure.
Topics. That's all we've got time for. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.